can I just go back to the bonds side of things? If you're looking to borrow money, build new infrastructure, part of getting that money, is there a requirement around you've actually got a plan for asset management? You've linked it. You actually understand your current state of assets. There's a whole of life cycle. There's some thinking behind that to get that money.
Great question, David. And Dr. Kyle Wedberg in our capital planning committee at the GFO is working really hard along with the other members on the committee and Lunda's help, and last year with Tanya Garost's help, to get organizations like Standards & Poor's and Moody's to really also start to get into understanding the practice of asset management, to have that evaluation. At the moment, unfortunately, it's not. It's based on a number of criteria, some of which are subjective, but essentially comes down to the traditional accounting practice of looking at the financial viability based on amortization and future cost. But we are working very, very hard to at least provide those counties or those municipalities with a solid 20-year plan to get more points in that rating perspective, and also be looked at favorably from an insurance premium perspective, which is another topic in the US. A lot of the infrastructure assets are insured, unlike Australia, which has a guaranteed NDRA framework. But work is being done, and every funding mechanism will require a level of scrutiny. And yes, work is being done in that regard. But right at the moment, the answer is not quite.
So, that's one approach, obviously advocating to, the big ratings agency, that's fine. But, are we getting to a point where the actual communities are demanding some of these things, or they just don't understand?
I think it's a combination. Right now, as Ashay pointed out, currently the requirement right now, even like in the state of Connecticut where I live, is to at minimum have a 5-year plan. When you go for a bond rating, they would want to see a minimum a 5-year plan looking forward, because that tells them two things. One is your ability to pay for the assets you have on the plan now, but it also looks into the future, knowing that if you have a couple of $1 million project in the next 5 years, you're going to come back and want to borrow money each year of those projects going live, and it goes back to your ability to pay.